All right, this lesson is going to go over estimating uncollectible credit sales. And so when we think about it, what is uncollectible credit sales? That's basically where our receivables, we have a sale, and the original entry is we debit the receivable and we credit the sale. Well, unfortunately in business, not all of our customers are going to pay us back. And so since some of our customers aren't going to pay us back, we would overstate our income by not recording those uncollectible accounts. So in order to match revenues and expenses over a given period of time, we come up with an estimation of how much of our accounts receivable we're not going to collect. Managers need, for estimating uncollectible credit sales, they create budgets. Remember, they create budgets and they have to create an estimate for uncollectible accounts. They have to evaluate their credit policies. Are we too strict? Are we too lenient? And like I just mentioned, we have to match revenues with expenses. And then finally, accounts receivable will show its net realizable value. The net realizable value is basically our receivables minus any uncollectibles that we anticipate, and that gives us our net value. Alright, so let's say Microsoft has a $500,000 balance in its accounts receivable, but it estimates that $30,000 will prove uncollectible. So once they estimate that $30,000 will be uncollectible, here's the entry. We're going to debit uncollectible accounts expense. So what we're doing here is we're adjusting our net income because we recognize that revenue, but now some of that revenue is not going to be collected. So we're going to write down that income by creating a debit to this uncollectible accounts expense. Now the allowance for uncollectible accounts has a $30,000 credit, and this is a contra asset to the receivable. So the debit of $30,000 reduces on income. The allowance contra is in contra asset, lowering the net realizable value. So if we were to look at the net realizable value of receivables now, we take the $500,000 that's in the AR account, and then the contra account, which is allowance for uncollectible accounts, the contra accounts receivable account, a balance of 30, we're now going to have a net value of 470. Alright, so this is kind of how the net balance would look. There's the 500, there's the 30, and then there's the net accounts receivable amount of 470. So now we actually, let's say we anticipate $30,000 uncollectible for the year, and then we record that 30 on the income statement. The following year, then we basically do not get our money from our customers. So we don't want to include that expense on the next year. We want to include it on this year, and that's why we're doing this estimate. You have to understand why we're doing this. So now let's say in the following year, the people go bankrupt. They don't pay us the money. So now we take it out of the contra account, the allowance account. So we debit 25,000. Remember, there was 30 in there, and then we're going to lower the receivable account. So now we're basically, they haven't paid us. We're taking out the allowance account and we're adjusting the receivable account in the next year. Notice we're not touching anything on the income statement because we've already reflected that loss on the prior year's income statement. So at the end of the day, if we look, before the write-off, we had AR of 500, we had our less allowance of 30, we have a net AR was 470. After the write-off, remember, we just lowered the accounts receivable by 25, so that gets us to the 475. And then we took 25 out of the less allowance account, so that gets us to 5. And so the net amount here, 475 minus the 5, gives us 470. So that's the process for estimating uncollectible accounts, and then the actual recording once the account doesn't pay. There you have it, and then now you could go work on some problems in the text.